This is Wall Street Week. I'm David Weston, bringing you stories of capitalism. This week from Detroit, the home of Henry Ford, where we travel to see firsthand what President Trump's trade policies are doing for and to the auto industry, and to talk with Ford CEO Jim Farley about what he calls the essential economy that needs our attention. Plus, from Australia, we bring you the story of a nation trying to make a big transition from natural resources to innovation. And we begin a three-part series on AI applied to the real world. We have covered the excitement about artificial intelligence and the massive demands for capital and for power. But where is it being used right now in ways that may justify the excitement? We turn first to healthcare, where AI is already helping our doctors make diagnoses and develop treatments that otherwise might be beyond their reach. But we start with the jobs market, where soft data are holding the Federal Reserve back from cutting rates more and cutting them faster. Steve Rattner is chair and CEO of Willett Advisors, which manages the personal and philanthropic money of Michael Bloomberg, our founder and majority shareholder. Steve has been watching the U.S. economy closely as an investor and gave us his outlook. Steve, the labor market is really top and center. We got a prior problem before we get to the state of the labor union, which is what are the numbers because of the government shutdown? Why are we shutting down the government?
Whether it's the right strategy or not, I don't know, but there's a legitimate purpose in what the Democrats are trying to do, which is health care. What most people don't understand is that in Trump 1.0, Trump tried to kill Obamacare overtly, through the front door, so to speak, and then John McCain famously voted it down. This time around, you've not heard them talk about Obamacare or the ACA or any of this stuff, but the fact is they've been trying to kill health care. There's a lot of stuff in the one big beautiful bill, but there's also this provision that would expire at the end of the year that provides what are called enhanced premium tax credits to people making less than $150,000 a year, and particularly those making less than $65,000 a year, that are going to expire at the end of this year. This would cost millions of Americans their health care, and it would raise premiums by 18% for as many as 20 million Americans who buy their insurance on the exchanges.
As soon as you say, what is enhanced premium tax credit, you sort of lose me, because nobody is sort of saying, should we do away with Obamacare or not?
Well, that's exactly their strategy, and the Democrats keep saying this is about health care, but I don't think the average American really understands about health care. There are 22 million Americans who buy their insurance on the exchanges. The insurance companies have already filed premium requests for next year. They have to do it by October 1st, and they're asking for an average of an 18% increase in premiums for people who buy that insurance because they expect so many people to drop out because of the loss of these credits that they raised. So people are going to find this out now. Now, you remember that the Medicaid cuts don't take effect till after the midterms. This takes effect now. And so people may not appreciate it today and support the Democrats for that reason, but by the end of this year, they're going to find out what this all means.
So let's turn to the question of the labor market overall. You follow this closely. Where is it? Is it as soft as some people think right now?
It's what people call a no hire, no fire labor market. It's kind of frozen. We saw in the ADP numbers this week, which are one indicator. They only show you the private side of the market, but they're sophisticated numbers and no reason to doubt them, that hiring has really, now I think for two reasons. One is uncertainty about the economy and tariffs and all the things we've been talking about for so long. And the other potentially is AI. We know that AI is going to have a major effect. You saw Doug McMillon of Walmart this week, for example. He has said privately to people that he thinks of his 2.1 or 2.2 million people, he might have 1 million people working 5 years down the road or something like that. It's going to have a major effect on our country, ultimately, I think, for the better, but with a lot of disruption along the way, and I think we're beginning to see those signs.
If the labor markets are slowing at whatever rate, what does that tell the Fed? Because given the reasons they're slowing, do short-term interest rates have any effect on that?
Well, in theory, they do. It takes a while. It's not the most direct transmission mechanism, but obviously, if you lower the cost of capital, business goes out and borrows more, spends more. It's good for the stock market, as we have seen. That creates a wealth effect. People who have stocks spend more, and that's the whole essence of monetary policy. But what I thought you were going to ask me, if you don't mind my saying, is that, as Powell said in his last press conference, the problem he has at the moment is he has to worry about both sides of his mandate. Usually he has to worry about unemployment or inflation. Right now he has to worry about both. We're not really in stagflation yet, but we have bits of that on both sides of the mandate. I think the one thing that may be hiding in all this is, again, AI. AI has the potential, and Trump, of course, did nothing to enhance AI particularly, other than doing a lot of press conferences with Sam Altman and whatnot. But AI has the potential to be a game changer. If we can raise our productivity rate by half a percentage point or a percentage point, it would have a dramatic effect on growth. It would allow for more growth without more inflation. I think that if the Fed were to follow what Trump and Myron want and cut interest rates by 200 basis points, you'd see a fair amount of inflation. And right now we're not even at 2%, as we both know.
President Trump came to office promising to help an industry you know well. You helped restructure it under President Obama, the auto industry. What has been the net effect of the various policies?
I think if you talk to auto executives, and some of them have said this more or less publicly, some have said it more privately, I don't think really much of anything good has come out of this. And the stock market, if you look at the share prices, would agree with that. Much of anything good has come out of this for the auto industry. I think Mary Barra of GM has been reasonably candid about the challenges it poses for them. As Jim Farley of Ford has pointed out, GM imports more of its cars from Mexico and Canada than Ford does, so that is a problem for them. The taxes on the import taxes on auto parts is a huge problem for them, but also these stop-start policies on electrification and CAFE standards and so on, where you go from one administration to the other and you're trying to make 5-year capital plans and product plans, and then suddenly there's a U-turn in policies. That's not good for them.
You pointed something that is really striking. On the one hand, the expiration this week of the EV tax credits. On the other hand, the CAFE standards. So sort of giving on the one hand and taking away on the other hand. So net, is that going to help the auto industry?
Well, but what those two things do is it drives, no pun intended, the auto industry from producing small electric or very fuel-efficient cars to producing larger cars that are less fuel-efficient. So then they have to retool and reorganize all their production plans. And sure, maybe if those policies stay in place indefinitely, it would be good for them. Bigger cars tend to have higher profit margins. They're easier for us to compete against the foreign cars that are where they can make smaller cars more efficiently, and so on and so forth. But we will have another president in 3 years, and this may all change again. And so it's not really great for American prosperity and capitalism to have these kind of stop-start policies. I think the government does have an important role in policy where there are what they call externalities, where there are effects of what a private actor does that aren't captured in the price mechanism in the market. And emissions and climate are the best example of that. That if you just let auto companies make whatever they want, you didn't have CAFE standards, you didn't have EV tax credits and so forth, we'd have bigger polluting cars. But if I were God, I would have done this very differently. I would have done it using the tax system, big tax on gasoline, things like that, to incentivize people and companies to move in the right direction. Not these sort of very jerry-rigged, complicated, on-again, off-again regulatory policies. Well, why do we do it this way? Because consumers don't see it. They don't see the costs of CAFE standards. It's not part of the American culture.
To come full circle, what do these policies and policy changes mean for employment in the auto industry, including the parts business?
Well, let's just step back. I think not just the policies, but the auto industry, and I did spend some time in the auto industry, has some really significant challenges. When you look at what the Chinese are doing, and yes, we have huge tariffs on their cars, so they don't come here at the moment, but when you look at what they're able to do and the prices at which they're able to produce and sell cars efficiently and how good the cars have become, they didn't know how to make cars for a long time. We kind of taught them how to make cars. At the wage rates we pay, with the other cost structure that we have in this country, it would be very tough for us to compete on a completely level playing field. So the question then becomes, how much protectionism, if you will, do you want to afford our auto industry, because we think it's important to have an auto industry?
If you talk to auto executives, as I know you do, they say it's not a completely level playing field. Can we out-innovate China to be able to overcome whatever subsidies are being given?
I think even if we gave the subsidies, I think you'd find that the Chinese can produce better, cheaper cars than we can. I think their innovation is exceptional. I think their costs of production is exceptional.
One of the advantages China has is a very large domestic market. Are we seeing sort of an epochal change, actually, from a world in which the United States was really a leader in auto production to one where we're not going to be? We're going to be the equivalent of a Europe.
Well, I think we'll be somewhere in between. I think Europe's car industry has had many, many struggles, and to the extent they've been successful, It's heavily been the German luxury cars exporting to China, ironically. But yeah, look, China does have, as you say, 1.3 billion people, and they're increasingly prosperous and able to buy cars. You know, over 50% of the cars sold in China now are EVs. I mean, they are in a whole nother world compared to us in the transition away from internal combustion engines into electrification.
Coming up, we continue the discussion of how the auto industry is faring and what needs to be done to ensure the strength of industries like it that make things, with Jim Farley, President and CEO of the Ford Motor Company. This is a story about the essential economy. That's what Ford CEO Jim Farley calls the part of the U.S. market where things get built, moved, or fixed. This week, he held a series of meetings at the restored Michigan Central Rail Station in Detroit, and we traveled there to hear directly from him what needs to be done.
95 million people, huge part of our GDP, that basically build things. Think about factory workers, construction workers, the people who move things, rail workers, truck drivers, and the people that fix things. Think about plumbers, electricians, people who are mechanics on your vehicle. That's the economy. It's huge, and we have about 1 million people shortage today.
What's going on there? Why are we short that many essential workers?
It's a combination of things, David, but I think the biggest thing is the societal prestige of these jobs has changed from our parents and our grandparents. You know, people all want to go to a 4-year degree and then they want to go into the white-collar workforce. That's what my grandfather told me. He was a factory worker. Hey, Jim, I don't want you to have to work this hard. Go to college. And the irony of the irony is that we have all these data centers, all this new technology to roll out. It still requires electricians, construction workers, and we have this huge shortage. The second thing is our country has really pulled back on investing in education programs, the local college support for these kinds of jobs. There's no high schools around vocational programs anymore. That's the exception, not the rule anymore. I think the last thing is permitting. All the regulatory requirements on these jobs is really tough, especially for small business. And it just makes these jobs hard and complicated.
How does AI fit with the essential economy?
Well, I hope that it will be a help, but it's hard to say that today. We're going to have a lot of tailwinds for the essential economy with AI. For example, we have to build all these data centers, all the transmission lines. That's going to require plumbers, electricians, a lot of technical people to do all that, construction workers. But on the other hand, over the last 20 years, the essential economy productivity has actually gone down, whereas white-collar productivity has gone up 20 or 30%. That's like, for the average essential worker, that's like $30,000 a year. So we don't have a good track record here of applying new technology like AI to make these jobs more productive. Automation, things like that, those innovations really took jobs out of the job market and out of the essential economy. I think we'd have to twist the technology through the lens of these critical jobs for it to be the opposite.
The government plays a central role in turning around the essential economy, with President Trump emphasizing manufacturing and the need for trade schools. But Farley has yet to see the real results, including with those auto tariffs.
It's too early to tell. I haven't seen a lot of new plant announcements of my competitors who import. Our market's 50% import. So what I was looking for is how many of those imported vehicles are now being built in the U.S. We haven't seen too many announcements. What hasn't changed is Ford's commitment to the U.S. We build 80% of our vehicles here. We're the largest employer of UAW workers, and we're the largest exporter by far from the U.S. I would say it is too early to tell, but I'm seeing the tone at the top in D.C. be very thoughtful about the parts tariffs, which more than 20% of our tariff, of our profits is lost on these parts tariffs. So yes, we make in the U.S., but we import parts from all around the world because some of them, like wiring looms, we can't even buy in the U.S. The tariffs on those parts, maybe 20% of your F-150, is 20% of our profit gone. And I'm seeing a tone at the top in D.C. where they are listening to us very carefully because they understand long-term that $22 billion of headwind for us will not be good for the U.S., especially for a company like Ford. I don't know what they're going to do, but boy, have we had a lot of conversations with Commerce and the President about this. And I remain very optimistic that they'll make the right adjustments. If they make the right adjustments on tariffs, with the EPA rule, some of the tax changes like PTC, I think we will see a much stronger U.S. industry in the coming years, and I'm sure hopeful of that.
When we spoke to Farley a year ago, before President Trump's election, the auto industry was working and investing hard to meet government targets for electric vehicles. Since then, EV policy has been turned on its head, making automakers' lives dramatically more complicated. Roger Penske, founder of the Penske Corporation and owner of IndyCar, says it's the result of ignoring what the customer wants.
No one asked the customer what they wanted, number one. And number two, we didn't have the infrastructure, and the expectation on range wasn't there. So everything came together. The way they sold electric vehicles with government support. The $7,500 is going away. When you think about that, that's $50 billion that the government's going to be able to put hopefully towards something that's better off, for our economy and better off for the country. But I would say they're going through a transition. All of them said, Mary Barra has, Jim Farley has, they're moving to lower cost EV vehicles.
You at Ford, like the other automakers, have really made a lot of capital investment commitments for an EV future. What happens to those investments now?
Well, it's an important question for our country. First of all, Ford never talked about an all-electric Ford. We always said about customer choice. We have hybrid, the F-150 best-selling vehicle in the United States. Almost a third is now hybrid. So we never bet the farm on electrification. And we were a first mover. We've been number 2 to Tesla, I think, for 3 years now. But that is the biggest next up question. How does Ford adjust its assets from moving to making large-scale battery operations? We have 3 battery plants in Kentucky and Tennessee, another one here in Michigan and Marshall. So 4 plus 2 assembly plants dedicated to electrics. What do we do with those assets? I'm not going to go into the details, but all I say is they're some of the best factories we've ever built. We've designed them flexibly, and we'll make the right decision for the company. We're not going to allow these to be mothballed. And we have more decisions to make on those battery plants and assembly plants in the coming months and years with this change. Because a year ago, we didn't see the customer like we do today. And boy, are we seeing customers buy hybrids and partial electric solutions. So America is moving more to low CO2 footprint powertrains, but they are not accepting full electrics anywhere near what we thought.
When you talk about some of the policies coming out of Washington, on the one hand, as you mentioned, there's the $7,500 credit goes away this week.
Yes.
On the other hand, you've got the CAFE.
Yes.
So there's some gives and takes on this.
Yeah.
How does that all come up for the Ford Motor Company?
Well, it's accelerating this awkward moment, basically. The $7,500, which could be up to, 20-30% of the purchase price, is gone. That makes EVs a lot more expensive. But think about Ford as a global company. We're not just the most American company. We compete around the globe. And in China, 50% of the vehicles are electric. In Europe, it's 30%. So we have to set up our industrial system to compete, not just in the 4 or 5% here in America with maybe a higher mix of hybrids or EREVs, but in China or the rest of the world, we still have to make this EV future profitable. To do that, we made a big bet 4 years ago. We did it in secret. We came up with a small group of people on the West Coast, and we redesigned the way we make and design a vehicle. We call it the Universal Electric Vehicle. It's kind of a Model T kind of moment for the company. That vehicle will be coming out in about 1.5 years. That is our way of competing with BYD's cost. They've been at it for 20 years. These markets are huge outside the US. We still have to be successful globally. We can't just draw a big wall around the US and say that's what Ford Motor Company is.
Another subject we discussed a year ago was China.
Yes.
And what's going on. Bring us forward 1 year.
Oh,
what's
boy.
going on, for example, with BYD.
Yeah, I mean, a year ago, Tesla was the #1 seller globally of electric vehicles, and VW was the top brand in China. The world's biggest market is almost 27 million. The US is 16 maybe on a good day. Imagine how big that is. It's not twice as big, but it's a big market. Now BYD is not only outselling Volkswagen, they're now the #1 electric player in the world a year later. Very powerful company, vertically integrated like Henry Ford did in the 30s. We're very humble, but at the same token, Ford has announced our Universal Electric platform to be built in Louisville, Kentucky, and we think it's basically a wash with BYD made in Mexico because we've thrown innovation at it. So a lot has changed, and we've seen Europe has been really the battleground for globally for the Chinese. Now it looks like this month, I bet you the Chinese will be close to 10% of the European EV market. Many of the brands weren't even on sale a year ago. MG, Geely, others. Now they're very successful like BYD in Europe. It's a really a moment, a transitional moment for our industry where everyone used to talk about South Korea or Japan. In my eyes, as a CEO, China is the place where the most fit industrial systems are getting created, not just for electric vehicles, but for internal combustion vehicles. And without projects like UEV, companies will be under threat of existence.
You were on the front lines when Japanese manufacturers really stole market share from the United States.
Yes.
But bringing it forward to today, there is a different economic structure in China that
Yes,
involves subsidies.
Yes, there is.
Can the American auto industry outcompete those subsidies, out-innovate those subsidies?
That's a very difficult answer to give you right now. I think it's too early to answer your question because we're only in the second inning of these pure electric vehicles, and the innovation cycle is so fast. We could be talking in a year or two of a whole new battery technology that could either change that equation. But I will say, at this point, they have a big lead. When you look at a BYD, we think on average $4,000 to $5,000 a vehicle of direct support from the Chinese government that's exported to Europe and to Mexico and places like that. Can we make up for that? Plus their scale, their industrial scale of being 10 times bigger than the US? I'd say it's pretty difficult at this point. I will tell you the level of risk that we've had to take on UEV, on the execution side, large unit castings, building a vehicle in a way we've never built before. It's not a guaranteed project. This is all going to come together just like we thought. And so we think we're even with them right now, but the speed of innovation we're seeing is very humbling for me. Even if we have a stable platform on cost today, will that platform be competitive in 5 years when the battery tech does another full cycle of innovation? Hard to say. I'm thinking about 2032 right now. That's to answer your question. I'm there. I have to make those capital choices now for 2032. To answer your question right now, I think there's a chance, but without huge support, where it's more of a level playing field, where it isn't in Europe, I think it's going to be really tough. Maybe the toughest battle of my career.
Up next, the Australian economy has been powered for 3 decades by its rich natural resources. We travel down under to see firsthand its efforts to diversify into new and more cutting-edge areas of growth. This is a story about the need to be good as well as lucky. Australia has been lucky in the natural resources that have been driving its uninterrupted growth for 3 decades. But now it needs to be good in innovation and investing to keep that growth going, as our colleague Heidi Stroud-Watts reports from Sydney.
Australia has long been known as the lucky country, a land of sun, surf and abundant resources. Yet for those looking to drive its future, fortune has been harder to find.
We now find ourselves at a place where there is basically no interested growth capital in Australia. Our last round, which was World Record-setting Series B, 80% of the funds inbound were foreign direct investment. Only 3 out of 20 investors who joined us were from Australia. So we are obligated to look outside. It's the lack of familiarity.
Michael Biersuk is the founder and CEO of Q-Control, a quantum tech startup based in Sydney.
It's not about loyalty to Australia or disloyalty, it's about economic opportunity. The US and the UK right now are making massive investments from the public sector and of course the private sector in advancing this technology for sovereign capability. Australia has not yet done that. And we're looking forward to that kind of investment in the future. This is a real map of data coming from commercial airplanes. At Q Control, we focus on this new field of quantum technology. And our specialty is building new kinds of AI that make this emerging technology area actually useful for end applications. One of the core areas that we've invested in is helping navigate when there is no GPS. Now, on a daily basis, GPS completely governs our lives. Unfortunately, the reliability of GPS has diminished tremendously just in the last year. Since March of 2024, we've seen almost 1,000 flights a day, commercial aviation flights, disrupted by deliberate GPS jamming. This is emerging as a major threat. And it's not just in commercial aviation. Defense sees exactly the same challenges. We set out to try and fix this through our work in quantum sensing, and we built a new technology that lets us navigate without GPS.
It's a business of tomorrow, the kind many believe should play a far greater role in shaping Australia's economy of tomorrow.
Well, we've run the risk of falling behind. I mean, there's no question about that. You've got to stay at the front of the pack, and to do that, you have to. You've got to keep innovating, you've got to keep asking every day, are our policies working? Complacency is a killer, in politics and government as in business.
But before examining the Australian economy of tomorrow, it's worth explaining the economy of today. It was 1964 when the author Donald Horne famously took aim at Australia, calling it a lucky country run mainly by second-rate people who share its luck. It was a jab at its complacency, a country whose wealth, he argued, came not from innovation or ingenuity, but from its abundant natural resources: iron ore, coal, gold, the list goes on.
There's no doubt that the economy has a pretty narrow base.
Jennifer Westacott is a senior advisor at KPMG and a former CEO of the Australian Business Council. She says that although the country's economy might not be highly diversified, it's proven to be very lucrative so far.
I think the economy still has incredible kind of foundations in mining and resources, and there's still a long, long way to go in resources.
Australia ranks second in the world for median wealth per capita, but its narrow base is showing fragility. Commodity earnings are expected to fall to $271 billion this year, about 385 billion Australian dollars, and continue to drop over the next 2 years on falling prices and an uncertain global economy. While the Reserve Bank of Australia recently slashed its forecasts for economic growth and productivity.
So I think, that the first thing we need to do is make sure that we protect and strengthen that incredible base that's propped up living standards for many, many years and has made the country extremely prosperous. And so there's lots of ways of diversifying the economy and driving greater innovation in the economy. The first is to drive higher levels of investment, and investment as a share of GDP is around the same level it was in the 1990s. So we need to get investment happening. That's about lower taxes or a more competitive tax system. It's also about reducing regulation. We've also got to drive more innovation. That's about skilling our population, making sure that we drive the new skills of the future, embracing things like AI, and going with sectors of the economy that are in our comparative advantage, and things that we can scale up.
And the economy's fragility places even more importance on setting up its future. Australia, for all its wealth, spends just 1.7% of GDP on research and development, well below the OECD average of 2.7%. Malcolm Turnbull was the Prime Minister of Australia between 2015 and 2018, and before that ran Goldman Sachs Australia.
At the level of the economy, the big priority has always got to be productivity, and that is driven by innovation. So you've got to at one level get rid of as much regulation and red tape as you can. At the same time, you've really got to supercharge innovation. This was a really important part of my time as PM, my first big economic agenda, the National Innovation and Science Agenda in 2015. That gave tech, R&D investment, venture capital, a huge lift, and which they're still benefiting from. But you've got to do it again. You know, you can't just do it once and put it aside and say that's it.
How do you characterise the environment when it comes to tech and innovation? Do you think it's not getting as much attention or as credit as it should be, or do you think that progress has stalled?
Well, look, Australia does not spend enough on research and development. Full Australian business doesn't, and we're not spending enough in the pure research, primary research realm of universities and research institutions are. So that needs more encouragement.
As a result, Australia's foreign direct investment is still heavily skewed towards mining, forcing companies like Q-Control to look overseas for investment.
We have not seen the same level of major tech successes, minting billionaires, building generational technology businesses in Australia as we've seen in the United States. And as a result, I think that lack of familiarity has made people just less willing to take some bets. And our objective, frankly, is to show by example, whether you're in government or a local investor base, that the upsides are enormous and real. And we're just trying with everything we can to deliver on that opportunity.
Could there be that kind of transformative sort of movement in Australia? And if so, what are the policy measures? What are the things in terms of supporting that possibility that you see?
Well, I think there's no question that the opportunity is there. I came to Australia from the United States because the research community was so strong when I was an academic at the University of Sydney. The bigger challenge has been building a industry base around the transition from basic science over into industrial applications. In that, Australia has been lagging. Now, we were the first venture-backed company in the field in Australia. The challenge is we haven't seen that many more in the last 7 years.
Westacott, who also serves as Chancellor of Western Sydney University, believes Australia should be capitalising on funding cuts to US universities to attract talent and drive innovation.
I think the first thing that we need to do is, of course, continue to invest in our universities, continue to invest in research and development. But we also need to send very consistent and clear policy signals that we're open for international students. Now, we have a cap on international students at the moment, which is very controversial in Australia. We need to send that message that we want international students, one of our biggest exports. We also need to make sure that we are encouraging skilled migration from young people. KPMG did a study several years ago which showed that we'd add $30 billion to the economy by targeting those highly skilled young people. And when I ran the Business Council of Australia, the key message that big employers would give to me is that they want more skilled, very specialised skills. So we should be really targeting those young people from the United States, come and live and work in Australia, greatest country on earth, and really targeting those super skills. So it's an opportunity, but we can't just kind of sit back and expect it to happen. We're going to have deliberate and purposeful policies and actions to encourage those people to come to Australia.
We have a huge opportunity in terms of talent, and while no Australian government wants to go out there and say to talented people in other countries, you're living in a terrible country, come and live in ours. You've got to be tactful about this. But let's face it, there is a war for talent, human talent, and we have some very attractive things going on, which is why, by the way, we need to be putting more money into research, because those scientists and technologists will want to come here and work with it. But you think about the livability of our cities, for example. We have some of the most livable cities in the world.
Ultimately, lifestyle can only take you so far. If Australia wants to remain competitive, it needs to be more than just a great place to surf. It needs to be a great place to invest. Its luck may not be running out entirely, but to get the economy humming, it needs investment and innovation. It needs to be good as well as lucky.
I think Australia is lucky, but we've made a lot of our own luck too. So I'm very optimistic about Australia's future.
Coming up, AI may already be playing a big role in your next visit to the doctor, without you even knowing about it. We tell the story of artificial intelligence in healthcare. Next. This is not yet another story about the promise of artificial intelligence. It's the first in a series of stories that go beyond the hope and the hype to see where AI is making a real difference today, starting with something important to us all, our medical care.
Good morning. On any given day, Tennessee-based oncologist Samyukta Mulangi could see as many as 25 patients.
Medical oncologists like me are pressed for time and we're overwhelmed with sort of clinical duties. Trying to do that work of charting in ahead of time, seeing the patient, documenting after the fact, and also now trying to squeeze in record retrieval in the middle of everything is just very impossible. And so you have the concept of pajama time, where oncologists and other physicians are just sort of finishing up their daily work at home after the kids are put to bed and after dinner, and it just contributes to a lot of provider burnout.
Okay. Dr. Mulangi is not alone. All across the country, doctors in all specialties are often stretched thin. The American Medical Association found that almost half of U.S. physicians experienced at least one symptom of burnout. It's little wonder that our doctors are feeling the burden, given the explosion of medical research. So Daniel Nadler decided to do something about it.
The rate of doubling of medical knowledge in 1950 was roughly every 50 years. In 2025, there are different estimates and there are different numbers. In a study in the British Medical Journal and another study in Nature, they found that the rate of doubling of medical knowledge was 73 days.
Nadler's PhD thesis from Harvard was on analyzing derivatives, which he turned into a startup using machine learning for financial analysis. After selling that company for $500 million, he turned his attention to helping doctors make sense of the tsunami of medical research coming their way.
We looked at this and we did another analysis and we said, let's ignore the doubling for a second and just ask the question, if you had to read just the top third of peer-reviewed medical literature just within your specialty, which is not ideal, right? That means no cardiologist is reading anything in neurology and vice versa, which is not ideal. But even if you just said that, how long would it take every day for a specialist to just read the top third of peer-reviewed medical literature just within their specialty? And the answer turned out to be something like 9 hours. So practically, that's obviously impossible. They would never see patients or never see their family, or they would never sleep.
And that led Nadler to found Open Evidence in 2022.
Open Evidence is designed to do for physicians what the advent of computer systems, let's call it that, on Wall Street achieved for Wall Street knowledge workers.
Open Evidence is an AI model trained on medical literature, carefully curated to ensure high-quality results.
For the first time in the last, let's call it 3, 4, 5 years maximum, we've reached a point in the sophistication of artificial intelligence, of computers broadly, that they can store not just the right letters and the right words in the right order, but they can understand the semantic meaning of the findings of these studies. So Open Evidence is an artificial intelligence, it's a computer system that's able to understand the semantic meaning of the findings of these studies so that it can act as a brain extender to physicians who have, even in the best and most generous reading of what they have to do as a physician in terms of keeping up with the pace of medical knowledge, such that they don't have to spend 9 hours a day just reading the top third of peer-reviewed medical journals.
Doctors are piling into the platform, which says it has signed up around 50% of all doctors in America and is adding 65,000 every month. Investors are piling in too. Its latest funding round valued the company at $3.5 billion. What is it that Open Evidence should be relied upon to do, and what do we still need the physician to do? For example, can Open Evidence diagnose?
No. So the physician is still relied upon to do everything that a physician was always relied upon to do. I see Open Evidence as a continuum or a continuation of a very traditional technology called search, right? So historically, physicians needed to search for findings in medical journals. That's not a new behavior. They've been doing that for years and years and years. One way to think about this is we spend a lot of time as a society celebrating the golden age of biotechnology, and we should, right? Every metric and proxy you look at in the data shows that we are accelerating the rate of drug discovery, including using artificial intelligence. We're accelerating the rate of drug development. And so we celebrate that. We're in this golden age, and it's amazing, right? This golden age of biotechnology. But what's not talked about a lot or enough is that this golden age of biotechnology is really the dark ages for physicians in terms of burnout. We expect that almost all physicians in the United States will be on the platform within the next year.
Dr. David Reich is President and Chief Clinical Officer for Mount Sinai Health System in New York. He uses open evidence, but as part of a larger range of AI models they are integrating into their hospitals.
I have the app on my phone, and it's available through our medical school library, and people do use it. However, we do also work with ChatGPT, and they've created an environment where we can have our medical students ask questions that contain protected health information. And that protected health information stays within the cyber secure environment that we work so hard to maintain. And so I think cybersecurity remains a key consideration in any tools that are a great assistance to us. And I'm sure that open evidence will work very hard to address that along with others. But I'm very enthusiastic about it. I think it's a great tool.
One of the reasons open evidence has become so popular with doctors so quickly is that it licenses the best medical literature from trusted sources, and it's free to doctors relying on advertising for its revenue.
We, right from the start, licensed content, licensed journals, licensed information, medical information from the relevant copyright holders. So we have an agreement with the Massachusetts Medical Society, which owns the New England Journal of Medicine. It's a nonprofit. We have a licensing agreement with the American Medical Association. Again, it's a nonprofit, but it owns the Journal of the American Medical Association, as well as all the specialty journals, the JAMA Oncology, JAMA Neurology, and so on and so on and so on, not just those. So we took a very different approach to copyright, to licensing, to all of this. And we're extremely proud of the fact that we're probably the only pure AI company in America that is not currently being sued for copyright violations. Our business model is the exact same as Google, which is, I think it's public. Google is one of our largest investors and has been an enormous patron to the company in many ways. So you can build very successful software as a service companies, and there are many examples of 10, 20, 30, 40, 50, $100 billion market cap software as a service companies. But once you start getting into the rare air of multi-trillion market cap companies, it's notable that that almost all of them, again, excepting NVIDIA and Apple, are either primarily advertising business models or have advertising as a significant component of what they do. And I think the explanation there is it is the business model that most aligns the incentives of the platform and the users to make sure you're delivering to your users the highest quality product possible, because your incentive is not reducing cost, your incentive is attracting more users and increasing your engagement.
AI tools like open evidence are already providing much needed help to physicians who must focus on their patients even as they need to keep up with a deluge of new research. But for AI to realize its full potential in healthcare, Dr. Reich says it needs to become fully integrated into the workflow.
Mount Sinai is doing the genetic information analysis on up to 1 million patients in partnership with Regeneron. And we're several 100,000 patients into this. And we have a vast trove of information on patient medical images. And we have incredible information in our electronic health record. Now, when we start to marry all of those data sources together and follow the promise of AI, in the not too distant future, I should be able to say to you when you come in, not only did I screen you and I found particular risks, not only do I have care pathways which suggest how I should go forward, but it's specific to you, to your family history, to your genetic markers, and hopefully giving you the best and safest possible experience. So think of the future as being much more personalized, and the advance of technology is so inspiring right now that I think that what I've witnessed over several decades of medicine could vastly change in the next several years, as long as we learn the lessons of past mistakes of being maybe too exuberant about technology, and making sure that people who are truly in touch with that social contract between patients in this nation and the payers and the government and the providers, that we actually find really good solutions.
Where Dr. Reich emphasizes the integration of all the data into a single workflow, Daniel Nadler envisions a world connecting physicians with others around the world who are working on the same clinical challenges.
As open evidence develops, if we go back to my metaphor of the sort of 1940s World War II telephone operator who's routing and connecting a human to another human on a battlefield, in this case, it might actually end up in a world where the AI is the least interesting part of the technology, and what's really happening is the AI is serving as connective tissue between a human and a human, between a human physician presenting some atypical combination of symptoms and another human somewhere in the country that is an expert on that, and where the job of the AI is, as far as possible, from answering the question and is much more about getting out of the way as quickly as possible and connecting that one human to another human. And that's a very wonderful and sort of optimistic vision for what the future of AI can be. You know, most scenarios for the future of AI, or many, are very dystopian. I can't comment on what happens outside of medicine, but in medicine, I think you have a very beautiful possibility where the technology ends up serving as connective tissue between a human and a human.
But whether it's connecting the doctor with the data or the human with the human, right now AI products like Open Evidence are providing much needed relief for practicing physicians like Sam Mulangi.
I would say that for me, open evidence solves like two rather unrelated but maybe orthogonal problems. One is that actually open evidence taps into the entire medical corpus of academic literature, which actually, for the most part, tends to be paywalled. The second thing that it does, I think, is just sort of, marrying the best of current AI capabilities around natural language processing and reasoning to try and interpret my requests and retrieve records easily in a very time-efficient manner. So having sort of smart AI tooling that is able to provide fast queries has just been a game changer for me.
And that is one application of artificial intelligence that is making a real difference in the here and now.
Next, the Motor City moves beyond motors. Detroit has been known as the place where cars are made since Henry Ford founded the company named for him in 1903. A lot has changed in the way autos are made and what they can do since then. And in recent years, Detroit has evolved as well, as told by Detroit's mayor, Mike Duggan, and the dean of auto racing in America, Roger Penske. Mayor Duggan, we were here in Detroit a year ago and talked about the renaissance in the city. Bring us forward. What's happened over the course of the last year?
Well, General Motors is about to move into their new headquarters on the Hudson site, which is a landmark for Detroiters. At one point, hosted the largest department store in America. And that site's been empty for 40 years. In a few weeks, we're going to open the Ralph Wilson Park on the riverfront, which will be the most spectacular riverfront park in Detroit that the Wilson Foundation has funded. And we're just continuing to build. There's cranes all over the city.
What about housing? A lot of places around the country are having real problems with affordable housing. What about in Detroit?
Yeah, no, we built $1.5 billion in housing in the last 6 years. So last year, we had a population growth of 7,000, the largest in Michigan, one of the largest in the country. But if you think about that, 7,000 more people means you need 3,500 more housing units, or you start pushing people out into tents. We built 4,000 more. So you will not find a tent city anywhere in the city of Detroit. But we're going to have to build another 4,000 units this year, and we're doing that. The 7,000 population increase last year was far and away the biggest in the state of Michigan. So the idea that Detroit's leading Michigan in population growth is something we haven't seen before. And it's young people coming back and young people staying. And you just walk through downtown and you've seen the thousands of housing units that we built. We've created an environment by completely rebuilding the riverfront, by bringing all 4 professional sports teams downtown and about to build a professional soccer stadium. By having these kinds of activities, we've created the environment where the young people want to live and want to work, and we're making it easy for the tech companies to locate here.
What about the job situation? There's a little softening in the labor market in the United States right now. Are you feeling it here?
We are in the manufacturing side. And The Canadian tariffs are hurting us, there's no question. In Detroit, we have 3 assembly plants, 2 Jeep plants and a General Motors truck plant. And Windsor, Ontario is right across the river from us. A large number of the parts that are in the Michigan-made cars come from Canada. So when you put tariffs on Canada, you put tariffs on cars in Michigan. Hopefully the president gets that sorted out soon. But we are seeing a real softening in the manufacturing market, primarily from the Canadian tariffs. What's happened in the last 10 or 12 years? New 5,000 employee Jeep assembly plant, the doubling of the General Motors truck plant. We've had almost $10 billion in investment in manufacturing and distribution. So it's been a huge part of our recovery. We built on our own DNA, and it's working well for us right now.
What about the tech industry? Because now AI is all the rage. Does AI have a role in Detroit?
Well, you are in a building here that 3 years ago was an abandoned book depository for the Detroit Public Schools that burned in 1979. And now there's 180 tech and mobility startups just in this building. And so you're seeing now the University of Michigan is building a new grad school that's going to specialize in AI right down the street. We are seeing all kinds of tech investment. And so we're making the transition, and of course, the automobiles are becoming more and more computers on wheels. If we're not ahead of the game on tech, we will end up falling behind.
How far can Detroit go?
It's pretty remarkable right now. There's $10 billion in construction going on in this city right now. So to see a whole new hospital system being built, to see new auto plants going up, seeing new high-rise apartments going up, to see a new University of Michigan grad school going up, a new Michigan State research facility going up. It is very exciting, and right now Detroit's the place where the companies want to be and people want to be, and so the future's really bright here.
Roger Penske has spent his career in the business of Detroit, from championship driver to owner of auto dealerships around the country and around the world, to owner of the largest fleet of trucks in the nation. Penske has watched the rebuilding of Detroit from the inside.
So we're here in Detroit talking about what Jim Farley calls the essential economy. It occurs to me that Roger Penske has spent his entire career in the essential economy. Give us your sense about where we are in the United States with the people who are really involved in that part of the economy.
Well, David, I think when I look at our business and where we're in Jim's, he's looking at really this middle class, this blue-collar worker that we need to educate and bring forward in order to meet the requirements. We talk about high tech, but this economy runs from the ground. And I think that what Jim's trying to demonstrate for his people and with the company is that we have to be collaborative from the standpoint of getting more people into the business, training them, and let them move up. To me, it's a great focus, and I think the human capital piece of it is really the backbone of our economy.
We're here in Detroit. I come from this area. I've seen Detroit during some pretty dark times and see it now, and it's very different. Give us your perspective on the rejuvenation of this city.
Well, I think it really happened during the Super Bowl when we had the Super Bowl here, Super Bowl 50. And I happened to be the Super Bowl chairman at that point. And it was a time for us, excuse me, to take the city and really change it. And we went to the leadership of all the corporate companies here for support. I remember Tagliabue came to me and said, we like to come to a city where we can make a difference. And of course, the Ford family had committed to build a new stadium, which we have now Ford Field, so it all kind of dovetailed together. And we went out, took 2 years to really get ready for it, and I think that flashpoint to show that we could have a Super Bowl here without any issues. I remember every single day we did different things. I remember as a committee chairman, I was probably close to the ground. I had 2 vans with painters in it. We'd go around the city and we say, paint this building or paint this building. And I remember calling up DDOT or MDOT, Michigan Department of Transportation. I said, would you please clean up I-75, the fenders, and the same thing coming in from the Detroit airport, because we got to make this city look like we're real. But you can imagine, but the commitment by the private sector and certainly the state and the mayor at that point, we were very fortunate to have a success. And that's really been probably the melting pot that has brought us where we are. With Dan Gilbert, obviously fully committed to the city, billions that he's invested here. Illich, obviously, the other sports, that family has been involved here for many years. And those two icons really have taken the city and invested their own capital. But then a number of other people, the CEO group here in Detroit is amazing. I remember back when Dave Bing was he was the mayor here, former basketball player, terrific guy. He called us together one morning. He said, I got real problems here in the city. It was snowing out. He said, I don't have any police cars. He said, they're all broken down. He said, an EMS unit today, if you call them, would take 3 hours to come. So after the meeting, I called him. I said, let me handle that one. I called the 3 OEMs, got commitments each for 33 cars. We were able to get capital for the EMS units. And again, within 6 months, we were up and running. Those are the things, by the right people going out and selling something that's real. That's the one thing I always say. I want to give back, but I want to give it back where I can see it make a difference. And I would say today, the money that's being provided from the private sector here is being given back, and it's making a difference. It's kind of amazing, isn't it?
Next week, we'll continue our exploration of where AI is already being put to good use, this time when it comes to education.
That does it for us here at Wall Street Week. I'm David Weston. See you next week for more stories of capitalism.